When I was at Clemson, I don't know if you guys got this opportunity, but speakers would come to Tillman Hall. And I don't know why to this day, because I've never really been this type, but I would go to every one of them. And I grew up in two places, West Virginia, and a small town in West Virginia, but then we moved to Myrtle Beach. And the reason why we moved to Myrtle Beach is because when you grow up in West Virginia, you never say where you're going on vacation. You say, when are you going to Myrtle Beach? So you think that's the only destination in the world. But one time, though, so growing up in a small town in West Virginia, you really only got to watch two pro football teams. And you had to pick one as your team. Pittsburgh Steelers, Dallas Cowboys. So my family, my parents picked the Dallas Cowboys, so that's who I was. Well, while I was at Clemson, all of a sudden I got this flyer and it said Terry Bradshaw was coming to speak at Tillman. All right, for those of you who don't know, Terry Bradshaw was the quarterback. He was the Tom Brady of the 70s. He was the quarterback of the Pittsburgh Steelers that won all these championships, usually winning those championships against the Dallas Cowboys. And so after he got done doing his presentation, he opened it up for questions to all these college kids. And, Clemson having, a lot of northern support. The place was packed. And one kid raised his hand, and I thought the question was awesome. And it's funny how I literally can remember this. And he said, all right, Terry, other than the Pittsburgh Steelers, who's your second favorite pro team? And he said, that's easy. It's the Dallas Cowboys. And then the people started booing all this support. He's like, what are you talking about? And he goes, listen, if you have to understand one thing, my greatest professional moments came beating them. So how could I not love them? Well, that kind of fits in a little bit to what I do. And so just so you guys know, what I do for a living is a little bit rare because I fight the Internal Revenue Service in court. And so that can be, it allows me to have a little bit different perspective on things. And so when we talked about, okay, well, what can we talk about today? I thought about, of course, tax reform, and then I thought about dealing with the IRS. But then I was like, gosh, wait a minute. I'm speaking to Clemson people. And this is the first time I've ever got to speak to Clemson people. I speak probably 50 times a year. But it's the first time I got to speak to Clemson people, and I was like, all right, but wait a minute. I'm going to tell all these Atlanta Clemson folks on how to hopefully save a little money, but I got to also tell you how to spend it. And that's what I'm really going to do. Some of you may enjoy already what I'm going to tell you to spend your money on, but if you don't, you'll appreciate it. Because I'll tell you, I believe I have, my family, my wife, my two boys have almost the perfect balanced life. And I'll share some of that with you. But I'm also got to teach you about tax reform so you can kind of understand what's going on. Because here's the one thing about tax reform. What do you always hear? Oh, no. And I get this all the time. No. I don't, tax is way too complicated. Well, unfortunately, we don't get to do that because it affects all of us. It absolutely impacts all of us. So you need to know a little bit about it. All right, so so again, tax reform, impact on you. We're going to talk about that for a little bit. But then how to deal with the IRS. That is something, because at some point you or your company or a loved one is going to have to deal with the IRS. And I want to give you guys a couple of points. And it's before and after they knock on your door. All right, so you're going to save taxes from number one. And you probably have a chance to save taxes from number two. So what do I want you guys to consider spending your money on? What I spend my money on, which is staying at my house, to me and my wife, the greatest place on earth. And that is, that lake that you see in the background is where we are every weekend we can be. And I want to share a little bit about that. And that's why I believe that it's a really fun place, because a lot of people say, oh yeah, I go to Clemson all the time, but you're always right here at your tailgating spot. You know where I am on the weekends? I'm over here. I'm over here, I'm downtown, I'm doing all of that. We literally spend a lot, any time, we'll go there for 24 hours if need be. And so I want to share a little bit about that with you guys. All right, here it is. Just so you guys know, I want to take you guys back for a second. So I'm going to give you as much tax information as anybody would possibly want to handle. But the one thing is, the last time, what do you always hear what the tax laws are? It's the Internal Revenue Code. That's what it's called. It's called the Internal Revenue Code. It's called the Internal Revenue Code of 1986. Who was president in 1986? Ronald Reagan. Ronald Reagan was president in 1986, so that's why you keep hearing. So in 1986, what are called Reagan cuts for the tax, because the tax rates came down. Before the Tax Act of 86, the income tax rate on individuals was 50%. It was 50% at the highest levels, and it came down. And so that's why you hear a lot of talk of, these are going to be the biggest tax cuts since the Reagan cuts of 86. But now I want to clue you guys in on one thing that every time you hear that's interesting, that shows you how different times we're living in. The ultimate tax law that went through, that did those cuts, but then also closed up some loopholes, guess who actually put it through Congress? A Democrat. And Democrats. It had complete bipartisan support. And so that was something that I read a lot about because this one is totally different. This is absolutely, Republicans versus Democrats. I am, as a tax lawyer, I can't get into the politics of it. I'm not getting into the politics of it. The way I look at it is, if Congress passes a tax law, now I and my clients have to deal with it, right or wrong. And so that's all I'm doing. So every comment I make, I want you guys to understand, I'm only doing it on this the way it's going to be. Okay, so let's go through this. First of all, what I've done for you is in three columns. Current rules. These are the tax laws we live with, and then the proposed House rules. And then there's a Senate rule. Okay, so what you keep reading about right now, okay, you're not really reading it. I get it. I don't even read it. But if you were reading, you're looking that there's a House rules that they've come up with, and there's Senate rules they've come up with, and these two have to be consolidated, some way merged together, and once they are synced, that's what will go on to Trump's desk, which they're hoping to do by Christmas. So let's look and see what we could be dealing with. All right, right now, at the highest income level, which is everything over and I'm going to primarily focus on joint, on married couples, but the highest rate is essentially 39.6%, but that's for everything over $480,000. So every dollar you make over $480,000 is subject to essentially a 40% income tax rate. Think about your friends, because this is important. You've got Clemson friends in California who pay at least a 12% income tax rate. And guess what? Real estate, just a little bit expensive there. So now think about how much your Clemson friend that lives in San Francisco, owns the house, who probably pays around $19,000, $20,000 in property taxes, pays 12% income tax on state, and then is subject to this. So keep that person in mind. All right, but here is the other tax rate that's important. Right now, we pay corporations 35%. Top rate. That's primarily what I'm talking about is the top rate, 35%. This is what has been why this tax act came into being. The problem is that, and I've got this chart and I should have brought it, you take all industrialized countries, you take them all, and you put them up and you show what their corporate tax rates are. We're the highest in the world. And so what has happened, and you guys have probably seen this a little bit, is now there's another thing I want you guys to really understand about our tax system, because it is unlike anywhere else. You leave today because you're like, oh my gosh, this system is crazy. I'm going to go live in Spain. And when I'm living there, I'm going to make $1 million a year. And you know what? That's good. Spain's tax rate's a little bit less than ours. I'll pay less in tax. No. We tax you on your worldwide income. as long as you're a U.S. citizen. I don't care if you're making your money in Spain, Cayman Islands, Europe, or Atlanta, Georgia. We tax you on your worldwide income if you are a U.S. citizen. No other country, especially for corporations, does that. They basically say, if you're working in another country and you're earning all your income in that other country, then just that other country gets that revenue, tax revenue. So that's what differentiates us. That taxing on worldwide income and our tax rates of 35% is really what this thing was trying to get to, because what they're trying to do is make companies feel a little bit better about leaving their profits here. That is what they are saying. But obviously they're dealing with individual rates too. Now let's look at the House rules. 39.6, but starting at $1 million joint. So yeah, just on line 1, that's a break. Now you can go, you do not hit the highest tax rate until more than double what it is under current. Senate rule, they're at a little bit lower at 38.5, also starting at $1 million. But notice that sunset after 2025, and I got to make sure I keep an eye on my time. But this is an important thing. As I mentioned to you, and there's a reason why I told you I'm from West Virginia, we had a senator who literally was in the Senate for about 182 years, and his name was Robert Byrd. And Robert Byrd is the reason for what you will sometimes see as called the Byrd Rule in the Senate. And what the Byrd Rule says is that, look, this is his basic level. But if you are going to impact our deficit for more than 10 years over a certain amount, then it has to sunset within 10 years unless you get more than 60 votes. We can't get 60 votes on literally anything in the Senate right now. So as you notice, the Senate, a lot of these key provisions sunset after 2025. Everyone in this room was around when George W. was president. George W. came up with also some tax breaks. They all went away in 2010 because of the same provision. That's going to have to be dealt with. So again, notice the tax rates are coming down. They're trying to do away with a little bit with this worldwide taxation. Here's some things though that are interesting. You all mentioned before about, business. This one has always been a given. Go borrow, you got a business, you want to do something with that business, but you don't have the capital right now, you go borrow it. But that's okay. You pay your interest rate. Interest rates are low, but guess what? You get to deduct the business interest. You get to deduct it. Well, now they're limiting that, the business interest deduction. That is very important, especially for the folks who are talking about involved in the real estate sector, because the real estate folks that are coming out of the recession that they had to deal with, they still have a lot of borrowings. They still got a lot of interest they're dealing with. So you gotta look at that. All right.
Is there a carry forward on?
It does not appear, no. I mean, because it's limited to your, that's a good question, but it does not appear so. But that, I'm not 100%. Okay. But this one is the important one they're important for us, but they're definitely important for our Tigers in California, New York. Here, right now, I get to deduct my Cobb County taxes, property taxes I pay. I deduct my Georgia income taxes. I get to deduct all of these state and local taxes. That's going away. Okay? I will get to deduct up to $10,000 of my real estate taxes on both of those. And if it gets to the Senate, that even expires after 2025. You think, God, $10,000, that's good. No. For our Tigers who are doing well in California, this, literally, think about it, for the big wage earners, this could easily impact them significantly. All right, I want to make sure I get through a couple more things because I want to get through the thing that impacts the Tigers the most. Anybody belong to IPTAY? Yeah, you got problems now, just like I do. Okay, because what happens? We pay into IPTAY, which then gives us the right to buy the tickets. That gives us our parking pass. And what does IPTAY do with that? IPTAY takes it and makes Clemson facilities be the Clemson facilities they are. This is the only political statement I'll make. The facilities that they are, which then attracts better and better students to Clemson. And by us giving that money and them using it for that, guess who doesn't have to upkeep upkeep everything. The state. But yet, now what they're doing is they're saying, yeah, that money you give to IPTE, is going to be eliminated. You can still donate to Clemson, just nothing for where you're getting something in return. Why does this thing matter? And as I'd love to see, I got an email from Clemson, I think it was last week. You need to think, and you need to think about your Clemson friends, and you got to be paying attention to this tax act because you may want to pay 2018 now. Pay 2018 now while you can still get the donation. I wish Clemson would come up with something that says, if you pay this amount now, then you don't have to pay again for the rest of your life. But I would like that one for a lot of reasons. But okay, so then we go through entertainment expenses. We all talked about this. You know what? Every single one who talked in this room, you've got clients, you've got customers. And what do? You actually go and you sit down and you have meals with them and you exchange ideas and you do all these things. And here's the thing. I don't ever go on a meal to the nicest restaurant in Atlanta with a client and say, boy, this is so not business related. This is so much better than being at Clemson on the lake with my family. No, it is for business. It is for business, and it is a business expense, and it should be deducted, but it is being eliminated.
Chuck, do they distinguish between like entertainment and meals?
No, it's going to be just entertainment for right now. Yeah, so right now it's the 50% deduction of the entertainment is all you can get. Now, yes, you're still going to be able to get part of it, but not for the entertainment portion. So yeah, you're right for T&E. But okay, last couple of things. Higher education. I got to be honest with you. Okay. Another quick little political one. I've never understood why student loan interest is not deductible at unlimited amount. I've never understood that. But, it doesn't seem to me that if you make too much, then your interest shouldn't be deductible. But that's the way it is. But for students coming right out of school who are paying a lot more in student loans than we ever did, their student loan interest that is deductible today is going to be repealed under the House bill. So that's something to keep in mind. That's important for your friends, family members, and all those who are paying student loan. Again, a lot of these things, and this is what I tell folks, is again, I'm not a tax planner, but what I tell folks is you've got to look and say, how is my tax picture going to change for next year? What do I need to do this year or do next year? And so look at that for the higher education. The next one, this one was one, as much as I've done this, I still am struggling with how this is going to work. Okay, so y'all know what a limited liability company, you see them all the time, LLC. Okay, you will never hear a tax attorney say LLC. Why? LLCs are a creature of state law. Okay, an LLC is simply saying, okay, I'm going to be a Georgia entity, limited liability, so therefore if a creditor comes to try to sue me, I'm protected. But an LLC is only under state law. Under federal tax law, it is either going to be taxed as, you can call it a partnership or a corporation. Most of the time, if there's multiple members, it's a partnership. Or if you're just on your own. A few people appreciate this. If you're on your own in your own business and you have a single member LLC, which the first time I gave a continuing education to first-year lawyers, and this woman continuously asked questions, and she then said, okay, single-member LLC, I got that down. Now, how many, what's the maximum number of members you can have in that? I was like, all right, good luck with the bar exam. But single-member LLC, it's disregarded. It doesn't even exist for federal tax purposes. But anyway, so what does all that mean? Because it's a flow-through, meaning that it's not its own taxable entity. LLC, if it's a partnership, is not a taxable entity. A partnership, if all of us are partners in a partnership doesn't pay its own tax. We have to pay the tax of the entity it flows down. So then, therefore, that's why the law has always treated it as, look, we just pay our own individual income tax on it at our own rates. They're trying to change that. They're trying to make it that LLCs and partnerships have kind of their own tax way of being taxed. This part right here is going to keep me busy for years on what is exactly going to be subject to the lower ones. Okay, a couple of people definitely impacted by estate tax. There's always a lot of discussion about estate tax. In 2010, which for the other of you who are, really pay attention to the Bush tax acts, what Bush did with his is in 2010, the estate tax went away for 1 year. 1 year. Okay, there were a lot of nervous grandmas for 1 year because basically if you passed away, grandma worth $20 million and you passed away on December 31, 2009, then your family paid $10 million in estate tax. If you passed away on January 1st of 2010, your family paid nothing. George Steinbrenner passed away during the year that the estate tax was repealed, which I think he planned that. But if you think about it, it was kind of crazy. I mean, believe me, there were conferences that were literally discussed this about dealing with the health and all these things. But what they did here was right now, if you're a married couple, you are not. That's why I love sometimes when they try to act like the estate tax is some way going to impact a lot of people. It impacts way less than 1% of the population. But if anything over $11.2 million, you're not. If that's what your net worth is when the couple passes away, you're not subject to estate tax. That is literally going up, literally double. And so anyway, as you can see, everything that I hear, I tried to listen last night on my lovely ride home. I don't know if y'all do this, by the way, now. Atlantic traffic since January of last year is so much easier to deal with. How is it easier to deal with? I go up 75. There's an accident. I have to put it in park and I have to sit there and wait for 5 minutes. Before, I would scream. I would do anything I could. I would call people who are like, why are you calling me? You haven't called me in years. And I'm like, well, I'm stuck in traffic. Now, I just simply click on YouTube and listen to the whole last series of the championship game from last championship. So I have each play memorized. And so anyway, but I listen to a lot of these, and everything that's discussed is all about the corporate tax rate, how it's coming down and all that. But as you see, this affects all of us, and it affects everybody we live with. I want to make sure I get through the rest. So here's a couple of things. So look at this. By the way, I can send you this chart. I can send you this whole presentation. So just ask me. But also I can send you the Tax Foundation that is out there does a really good job of really detailed charts and shows you the comparison. But here's the next part. At some point, especially because these rules or otherwise, you're going to have to deal with the IRS. And this one has always been one of my favorite cartoons because of the way it reads. The IRS. And until this cartoon, as long as I've been dealing with it, I never put it together that when you get it that close, it does say it's theirs. All right. So here are my six rules. Actually, there's 5, and I just added 1. Okay, here's the part that I love. And I will tell you, the larger the business, the more that this seems to happen. All right, what happens? So today you decide, you know what? God, I have got to move. The family, we got to move. We got to move. You know what? I am going to go down, and I'm going to take the boards to get my real estate license so I can understand how to do inspections. I'm going to put this for sale sign up. No, what do? We get a realtor. We get a realtor. That's what we do, and they earn their money for doing that. You know what? I finally have done all right in my life. So I've got this money that my family can invest, and we got to do it for the long term. But I think I'm just going to kind of be a day trader on my own, kind of pick it up as I go along, because I really feel like that I can beat the market, No, we don't do that. We go get good investment advice, and we get investment advisors who spend their time doing this. Okay, people do that, but it is so funny to me when I hear this. Well, I've been dealing with the IRS. Okay, so let me get this straight. You'll use a realtor when you need to sell your house. You'll use an investment advisor when you need to deal with your portfolio. But when it is time to deal with the most powerful financial bureaucracy the world has ever seen, I got it. Well, here is what I want you to think about for you, family members, businesses, or whatever, when you think about, I am the one who actually have the tax return that's all about me, so who better to describe what went on than me? Anybody ever watch Dateline? Have you ever watched Dateline and the person who was actually guilty is in the little cop room, and have you ever seen that work out well for him? No, it doesn't. That's why I always love my clients who say, look, just take me down to the IRS and I'll straighten all this out. It doesn't work that way. So the first thing is don't try to represent yourself. Second, though, what I tell people is audit yourself. I love this. I absolutely love this. Some people go, yeah, I'm being audited by the IRS, but there's nothing on there. There's nothing they can find. Okay, well, there is no such thing as a perfect tax return. So if you ever get contacted by the IRS, state of Georgia, anybody who is going to audit you, you can't just say, here are my returns, there's nothing there. You got to take a look at it. You got to look at it closely. You got to second guess yourself. You got to talk to the advisor that helped you prepare the return and say, where are our holes? Where do we have problems? Okay, here's the other thing. We just now went over this new tax reform. Do you think that you need to deal with those changes that are going to happen in January of next year? When's the best time to deal with it? Now? Or October of 2019 when you're preparing next year's return. Because that's when most people do it. They go, wait. Well, of course I don't have receipts. It's October of 19. Okay, no, that's because you have to prove it. The one thing that I tell people, this is the best way that I can summarize it. If you go down to the IRS and you show them contemporaneous documents. Here are my receipts. Gospel. If you tell your story with no receipts, you're a liar. This is the best story that I can tell you from dealing with the IRS. It was in trial, and it was all about, just so you know, corporations are limited in not how much they can pay their executives, but they can pay them as much as they want, but they can only deduct a certain amount. General rule, $1 million. So if you pay your executive, $5 million, just assume that the rule is you can only deduct $1 million. That other $4 million, you can't. That's one of the things. But then there's also, that's for larger companies. For privately held companies, they can only pay what is reasonable compensation. Okay. And that means that the IRS gets to determine what is reasonable. And unless you are a professional athlete, then nobody's entitled to more than $1 million in their eyes. And so I had one where a guy paid himself so much out of his company that ultimately it created a loss for the company. And so he was on trial. But the great thing about it was he had done minutes. Y'all have all heard of corporate minutes. He had done minutes. He was the sole shareholder of the company, sole officer of the company, sole member of the board of directors. Not a lot of disagreement in the boardroom. But he did minutes every year. He did minutes. And for those of you who watch Seinfeld, who the third person, when that came up, he talked in the third person. Let's just say his name was John. He was like, this year, John, it was from the board, and it was the officer, the president, it was reporting to the board about the job John did. So John was reporting to John on the job that John did. And so it was talked in the third person. And it talked about having to initially borrow money. John had to borrow money to start this company from his father-in-law, which is the most excruciating thing he ever did. He did not take a salary for the first 5 years. And then he went on and on and this year, John decided to acquire this business, which has now reaped a reward. And he went on and on for 4 pages about all the great things John had done and why John was entitled this year to $7.5 million of compensation, even though the most he had ever made before from the company, because it was struggling, $285,000. So of course the government's like, wait, you made $285,000 last year. You don't get to make $7 million to deduct it this year. So they challenged it. And it got looked at, and it finally got looked at by a judge, and the judge came back and said, okay, who am I as a judge to second guess the decision of a board that's making the decision on who they believe how much they should pay? Think about it. That's the board. That's him deciding on how much he should be paid. That is my best story as far as document. The other thing is, which I always love, people will say, oh, Chuck, I've still got this matter going on with the IRS. Oh, really? What's the tax year? 2001. Wait, 2001. Generally, 3-year statute of limitations. Once you file your return, you can count from your return, you count 3 years. General rule is you're done. And then the IRS can't try to get more tax from you because they can't assess more. But I'm like, wait, What do you mean it's 2017, you're still doing 2001? Well, the IRS, they just said they need to look into some more stuff, and then if they can confirm these things, then it's going to go away. All right, it's 16 years later from the time he filed their tax return. Be very careful. Too many people sign extensions, and they shouldn't. Next thing is, there are a lot of things. The more successful you get, the more phone calls you're going to get. And the more phone calls you're going to get is, I got a tax deal. I got a way that you can cut your taxes. When you hear this story and it's too good to be true, that doesn't mean it is. I will tell you, there are a lot of things that are true. The one thing that I mentioned is, like, for example, after Hurricane Katrina, Congress came out with a code section that they put in that said, look, if you acquire commercial property in the state of Mississippi, we're going to let you write it off so quickly, your head's going to spin. Because why? They needed people investing in Mississippi, and they did. It was too good to be true, but it was actually in the law. But there are some things that aren't necessarily in there. Just know if it's too good to be true, you got to be sure, because you will need me someday, regardless of whether it is good or bad. And then, of course, nothing in life, in my professional life, gives me more pleasure, and I never would have thought about this the day I did it, but my now going on 14-year paralegal is a South Carolina graduate. So now she has a child. So now every year we have a bet, which has been going very well recently, on who should win. So this year her son had to wear a Clemson jersey to school, and that got all over Facebook. But it is so funny at this rivalry that we have, and how it just kind of comes out when you're not even thinking, And believe me, I'm not somebody that goes around and talks about the rivalry all the time, but it is funny. So this was my last trial, which was really not that long ago, and I had a witness who was getting very frustrated because he had a stack of documents like this, and I was telling him to turn to certain tabs and go through a bunch of documents, contemporaneous documents, and he was getting a little frustrated, and so I was trying to kind of calm him down a little bit, and so this is actually from trial. All right, let's just stay in the book now. So as you see, we're Exhibit 88P, so we're pretty deep into some books. Tab 88, okay, so then he says, whoever made this put these upside down. The witness. The tabs are upside down to the pages, or some of them are, wait a minute, only if you look at the backside. So the book was completely disaster. And so then, of course, I say, well, if they're upside down, it's because my paralegal went to South Carolina University. So, yeah. And guess where she was at the time, sitting right next to me. So anyway, all right, so this is what I'm going to point out, because I am way beyond what I wanted to talk about, so I want to hit this. So what do you do with all this money that I just now saved you in the last 20 minutes? I want you guys to think about, either you or your friends in Atlanta that are Clemson people. The thing that I absolutely love is, when I went to the national championship, I went to both of them. By the way, my in-laws are all from the state of Alabama. So we actually went to both national championships together, and both rode home together, and on both years. That wasn't fun. First year. Second year, it still wasn't fun because it's my in-laws. I mean, how much hard time can you give your in-laws? But the one thing was that I got to see in Tampa, which I love, so many of my fraternity brothers and good friends, but who live in California, live in Arizona, and all these things. And I will tell you that the one thing that they were the most jealous about is one of my closest friends, who is a diehard Clemson person. He literally came back this year for the Georgia Tech game. He hadn't been to Clemson since 1993. They don't get the opportunity that we have. I mean, I think that we literally, when you're a Clemson person, I think we live in the greatest place on earth, because we are here and we're in the capital of the South with all this opportunity, but we're an hour and 45 minutes, depending on how fast you drive, and depending on how everybody's cooperating up 85, we're an hour and 45 minutes from where we love. And this is what, we do through the time, and at about, literally in 2010, I literally said, I want a place on Hartwell. And so we went and we looked, and I will tell you, we live on this lake, which, by the way, if anybody ever says, Lake Hartwell, what's that one? Because Kiwi's talked about a lot. I love Kiwi, but something that people don't realize about Hartwell, because finally I got a friend, people come with us up to Hartwell, and they go, where is everybody? Where's everybody on the water? And I go, well, you have to remember, okay, two very important facts about Hartwell. Lake Think about our lakes around here. Lake Lanier, Lake Oconee. They are about each 40% of the size of Hartwell. Hartwell is more than double, way more than double their size. Well, is there any city close to Lanier that would feed into it? Atlanta. Is there any city close to Lake Oconee? Atlanta, Augusta. We went with our friends to Lake Oconee for July 4th, and we're woken up at 7:30 in the morning. And I'm like, wait, why are we getting up on a holiday? And say, he's like, well, we got to get the kids on the tubes and getting them skiing because they got to get off by 10:30. And I'm like, why? They go, it's going to get too crowded. That was literally French to me because it'll be July 4th and this could have been July 3rd, to be honest. Because Hartwell is so big, it's so big. But the other thing is, now I will say, it has the same problem. Lanier has got Atlanta, Hartwell's got Seneca. So you do have the population boom issue because there were 11 more people that added to Seneca last year. But anyway, so this is what we do. So now everybody goes, oh my gosh, Chuck, can't do that. I mean, I got kids, they got soccer, they got all this stuff. I have two sons that play travel baseball out of Cobb County. One's 14, one is 11. On average, that takes 17 hours a week. It takes a lot of our time. But if one of them has a pool game that ends at 2 o'clock on Saturday, and due to how well they did, they don't have to play till 11 o'clock on Sunday, we go there. And we get to go to this place. And here, of course, is Kiowee, which is probably where my wife and I will retire. Now, here's the thing. I just pulled this offline. Let's just say you were at least thinking about it. Maybe. By the way, I'm a tax attorney. I'm not a real estate agent, so I'm not promoting this for my benefit. I'm just permitting it. And by the way, this is my smart aleck Garrett Gamecock paralegal who I said, hey, put this on and give it a good title. Smart aleck, hey, house. Yeah. So I pulled this off. So here's what happened. I saw something in Clemson where I was like, you know what? I'd like to just kind of keep up on houses that are up for sale in the Clemson area. I have a house, but I just like to see what's for sale. And so I clicked on to one of the real estate agencies up there. It's a local one. And literally once a week, it just sends me new houses that are for sale, houses that have been sold, houses where prices have changed. But like this is on Hartwell. I can't show you all the pictures because they go all the way back. I know nothing about this, but it's nice inside. How much do you think that house is in Atlanta? Just in Atlanta. And now keep in mind, full basement, three bedrooms, 650, 700. This is a $300,000 house on Lake Hartwell with a dock. So here's what I love. One of my good friends said this, Chuck. Okay, even if we had the time, I don't have the money to buy a house on Hartwell. And I said, oh, okay, I know you don't, but could you move I got to get out of my driveway. Can you move your $130,000 Land Rover that you have? And it's your second one in a row. Because I will tell you, when we started looking, you can find a house on Hartwell that your family will enjoy for less than $200,000. And it's just, I'm not promoting this other than Wes, who I wish could be here. If y'all know Wes McMullen, he lives on Kiowee because we have this dream because he is also president of a bank here in Atlanta, but he also lives on Kiowee. And we have this dream of where there's so many Atlanta Clemson people that spend a lot of their weekends on Hartwell and Kiowee that we just have, when you ever see those passenger vans that are going between airports. But the thing is, those people are miserable because you're sitting next to some Yahoo you don't know. And then you're just like, you look out, they're like this. Well, imagine one of those, we just keep thinking, of course, that's the way Wes and I would think, this big Mercedes van where we all have our own little laptop stations and we're going back and forth, and because it really is. It's an enjoyable thing. But now I know what a lot of you are thinking. You're saying, Chuck, but if you do this, then you give up your beach trips with your family. Because that's the one thing about family, that's what we decided. We looked at how much we spent on beach trips and those types of vacations. We still do, when we can, overseas stuff. But we gave up and we said, no beach trips. Unless we have to go for a baseball tournament, no beach trips. And a lot of people are like, no way, I am not giving up. This looks nice, that looks great, but I am not giving up my beach trip. I am not. I am not giving that up. You know what? You should only do something for fun with this kind of crowd, tailgating. That's about it. But anyway, so yeah, you may have to kind of give that up. A couple other things. You guys have to rush back. You guys have to rush back after games. My little one, we have to go out onto the field after the Citadel games. I know the entire Clemson roster because literally, I don't know if y'all know this, when the last minute of some of our games, of those types of games, fans get to play because, it is so, and this is the one tradition that everybody we bring. I will tell you, I love where we are as a Clemson family right now overall. But the one thing that is great is every home game this year, we had a Georgia family that was visiting us because their child wants to go to Clemson. And I love. So I would make sure to do this. And they were all blown away by two things. I didn't know Clemson was on a lake. And then two, they would all say, wait, you can go on the field after the game? Because this is unheard of in SEC world. Okay, I don't know if you know this, but that is my son with the arm around. This is one of about 10 pictures that day. And I think there's a chance that guy's going to be playing on Sunday next year. So it's just cool, and it's a lot of fun. And it's also the reason why we don't have to rush after tailgates because we're one of the last people to leave so everybody can get out of there. Here's the other thing. A lot of y'all know Bubba Britton. Everybody knows Bubba. If you go to Clemson, you have to know Bubba. This is another thing, which is a good thing. You come to Hartwell, Bubba will teach your kids how to water ski. This is Bubba teaching my youngest how to water ski. So, with that though, I got to tell you a little story. This one also is interesting. This property right here, such a smart idea. And if there's any play, this property goes all the way down to the water. And guess what it looks at? Clemson Stadium. Finally, somebody who owns that property on Hartwell has said, hey, this is as good as it's going to get. By the way, check out my Smart Aleck Gamecocks paralegal, a field. Anyway, here's something. I want to wrap up, though, more talking about talking about the tax code and talking about something because you're going to hear a lot over the next little bit, which seems like it's very, very confusing, and people want to act like they know why stuff like, oh my God, the corporate tax rate is going down. All they're doing is making it to where the corporations are going to be able to keep more profits and more profits. But there are underlying reasons. So as you hear why Congress is passing certain things, try your best before criticizing it to simply understand why are they doing it. Because if you understand, like, why reduce corporate rates? Why are you taking away my entertainment experience? Why are you doing these things? Then you can appreciate it a little bit more. Because what I feel like in the United States with the tax laws is that we're just told, okay, the tax laws are very confusing, they're complex, they favor the rich, done. And no one explains it. And then therefore you have a lot of people walking around not understanding why the laws are the right way. I faced this same issue, my wife and I did, with this little guy. My wife, born and raised in Atlanta, from Alabama parents, and we have two boys. One rule for two boys, Southern gentlemen. No matter what, all things flow into that. She wants to raise two Southern gentlemen. But she doesn't always explain to two boys why they need to do certain things because it flows up to this ultimate goal of, making the best for our country, but of course for them, making you a Southern gentleman. So this little guy is a baseball player. His older brother is a baseball player. Well, for those of you who are around two boys when they're of different ages, especially when there's about a 3 to 4 year difference, what older boys like to do is they like to get the little boys to say things that the older boys know they can't say. And so then they get them in trouble. Well, this one, he's Carson. And so what happened with Carson was we were leaving a baseball tournament of my older one when he was young, and they had allowed my youngest one to go into the dugout. And as we were leaving, we were then going straight from the tournament to the lake. And we were about to be going right through Clemson, stopped at a red light right there on 123 in Clemson. And here goes a very, cute girl jogging by. and she's just jogging. I don't think anything about it. My wife doesn't think about it. And all of a sudden you hear the 5-year-old go, "Hey, Davis," it's his brother, "hottie, hottie." And I'm like, oh no. Oh no. And my wife turns around and reads him the riot act and says, "We do not talk about women in that way. We are respectful." And she goes on and on with every rule you can imagine. Now, again, the youngest one, just like I was telling you about tax law, didn't really understand maybe what he did wrong, and he didn't know how to correct it. And so after she told him that we respect women, we do not look at them as objects, and went on and on and on, and then she goes, "All right, Carson, what do you have to say for yourself now?" "Hottie, hottie, ma'am." So, thank you guys. Thank y'all.